Let's move on to Gannett. Gannett being the parent company of USA Today. Shares of Gannett up 20% on reports of a takeover bid by MNG Enterprises, a fund that includes the Denver Post, the San Jose Mercury News. They're talking $12 a share. Right now, when we walked in the studio, the stock was trading at, I think, $11.68, something like that. This seems like a takeover bid that is marked for success.
So this is disturbing. As someone who's in I used to work for a company called the Journal Register Company, which was a predecessor of Digital First Media, which is owned by this hedge fund. And as a fan of news, as people who produce a lot of content, these are people who come in and they don't just combine the back offices. If they were saying like, yeah, we don't need the Denver Post and the Los Angeles whatever to both have CFOs, all right, maybe you can. No, they get rid of 40% of the news staff. And then when surprisingly the audience doesn't like that, their answer isn't let's hire some news people back. It's let's keep cutting. So as a shareholder, be careful what you wish for. Because, yeah, you might get a slight premium on your stock, but you're going to lose your source of local news. And there is a scorched earth track record. To give you an example, the paper I worked at in Torrington, Connecticut, when I was the editor there, was understaffed at 18 full-time editorial staffers. There are 3 people in that room right now.
Wow.
Hard to run a newspaper. And yeah, some of the production was outsourced and some of the things, but like, how can you cover the local news with 3 people in the newsroom?
Well, and here in the D.C. area over the last 25 years, we've watched the Washington Post as a standalone public company shift its business focus to be, to include educational services, that sort of thing. And it's only when Jeff Bezos comes in and buys the paper and starts to invest in it and it's removed from the public markets that it begins to thrive. Although I should say, in terms of a publicly traded company, the New York Times over the last couple of years has done a good job in expanding its digital audience and rewarding shareholders.
And you're seeing it other places. It's privately owned, but the Boston Globe, where I used to work, they decided it's a premium product. We're going to charge a premium price, and they're putting resources into the news people want. Hearst in Connecticut, buying up a bunch of newspapers and combining assets where it makes sense. It's fine to only have one UConn reporter covering women's basketball, not 3. But nobody's going to buy USA Today or any of their local papers if they don't actually have reporters. And we are a partner. USA Today uses our content. So in some ways, them having less staff might be good for the Motley Fool. But overall, you have to understand when you buy a newspaper, public or whether you're buying a share of stock, the returns have to be modest for the business to work.